Hi, welcome to this podcast. For Chapter 8, this is Inventory Valuation, and this podcast covers Perpetual LIFO. If you see terminology, perpetual records are kept in dollars. Dollars means that it is really perpetual, and our focus here is going to be LIFO. So, this is the type of information that you are given in a problem. And what I have done is copied that down into a T account. Remember that Perpetual tracks all of the ins and outs of inventory. So we can think of this as our big inventory T account. Debits are on the left, and those are our purchases and our balances of inventory. And credits are on the right, and we credit inventory when we sell inventory. So I've taken this information here and I've put it in chronological order. When we're doing perpetual inventory, the dates matter. We have to keep track of the order that items were purchased and then sold. Recall that that's not true about periodic. Okay, so if you haven't already done so, I would encourage you to copy the information down on a big T account. I think you'll find that much more helpful in calculating these things. And then you can go ahead and pause the video if you need to and write that down. And then we'll then you start it up when you're ready to do this. Okay, so we're doing LIFO, and LIFO stands for last in, first out. So what we're trying to figure out is what were the last items purchased, because those are the ones that we sold. Now, again, it's periodic, so we have to start. June 1st, we have a purchase, so there's no decision to make on that day. That's just what we purchased at. June 2nd, we had a sale. We sold 600 units. So the decision we have to make is which 600 units did we sell? And of course the answer is they had to come from here. Now, just to be clear, they could not have come from down here. And that's a key difference between perpetual and periodic. Under periodic, we assume all of the goods were available for sale. Under perpetual, the dates matter. So June 22nd hasn't happened on June 2nd, and so there's no way we could have sold the goods from June 22nd. Okay. So we had to sell them from June 1st, and that's $3.20. And so 600 times 320 is 1920. All right, then on the 3rd, no decision there. On the 6th, we sold 1,600 units. Okay, so what were the last ones in? Oh, sorry, I made one mistake here. Let's just write how many units we still have here. So remember, of the 800, I sold 600, and that leaves 200. Okay, back to June 3rd. I sold 1,600 units. The last ones in, oh, I said that wrong again, excuse me. June 6th, I sold 1,600 units. The last ones in were June 3rd, so I sold 1,600 of those, leaving 600. And so 1,600 times $3.10 is $49.60. Okay. June 7th, we had a purchase, no decision to be made there. June 9th, we sold 1,000. So which 1,000 did we sell? Well, we sold our most recent purchase, which means we sold 1,000 of those, leaving 200. So 330 is 3,330. Oh, that's not right. How about that? 3,300. Okay. June 10th, we had another sell. We sold 400. We have to decide which 400 did we sell. Well, we must have sold all 200 of those, leaving 0. So let me write that down. 200 times 330. And we sold 200 of those, leaving 400. So 200 times 310. All right, so let's see. That's 660, right? 220 times 330 is 200, excuse me, times 330 is 660, and 200 times 310 is 620. So those total 1280 for the cost of goods sold on that day. Okay, let's keep going. The 15th, we had a purchase, so there's no decision on that day. The 18th, we sold 1,400 units. The first ones in then came from here, so that leaves 400. So 1,400 times 340. Let's calculate that. 1,400 times 340 is 4,760. Okay. June 22nd, no decision. June 25th, we sold 200. So we sold 200 from there, leaving 300. And that's probably 700. Okay, so now this problem asked us what was our ending inventory and cost of goods sold under Perpetual LIFO. Now let's go ahead and calculate that. Remember, ending inventory is the debit side. So what's the amount of our ending inventory? Looks like we have quite a bit of it here. We have 200 units at $3.20. We have 400 units at $3.10. We have 0 units at $3.30. We have 400 at $3.40. And we have 300 at $3.50. Let's I have to scroll down and give myself a little bit of room here. So, how many units do I have? That's 1,300 units of ending inventory. And I guess I have to extend these. Let me do that. So 200 times 320 is 640. 400 times 310 is 1240. 400 times 340 is 1360. And 300 times 350 is 1,050. Alright, so let's add those up. Alright, hope I did that right. I came up with $4,290 as the value of my ending inventory. And now let's scroll back over to this side and figure out the amount of our cost of goods sold. Okay, so I add up all the units. I know that I sold 5,200 units. And my cost of goods sold is just the total of all of these sales I had. So let's hopefully I do that right, 1920 plus 4960 plus 3300, 1280, 4760, and 700 gives me cost of goods sold of 16,920. And so that's what, to answer the question, that's what I'm looking for here, right? Under Perpetual LIFO, what is the value of ending inventory? It's 4290. Or what is the value of cost of goods sold? It's 16,920.